Hi guys, it's Nick. I'm so excited today to have my special guest, Andy Christenot, join me, who is the mortgage maven, let's call you today. She's going to tell us everything we need to know right now about mortgages and how they've changed, etc., and what we're seeing in the market because there is quite a demand all of a sudden, and I have a lot of buyers asking a lot of questions. So,
Yeah.
hi, how are you?
Hi, Nicole. I'm good. Thanks for having me. There is definitely a lot of information, a lot of things to sort of clear the air. There's a lot of misinformation out there, and it can all be very overwhelming for buyers and homeowners alike. So happy to help. So what's going on? It's been quite the roller coaster in the last couple of weeks. Everybody's seen great advertisements for low rates, and we've seen the Fed cut the prime rate, and there's a mad dash because of COVID and stimulus and unemployment and so forth. What people and general consumers don't understand, and buyers, is that there's a lot of behind the scenes, and there's a lot of inner workings in terms of mortgage loans. And mortgage loans trade and act like stocks do. So when the stock market is trading, investors are buying and selling stocks. Mortgage bonds work identically, and they're bought and they're sold on the open market. And so when there's a huge demand for them, investors are then buying them and so forth. And it dictates rates. It's a supply and demand issue, right?
Yeah.
And so with COVID and with the unemployment situation, it's been quite the roller coaster because there's a big question mark on people that have existing loans, people that are applying for loans, and whether they may or may not be employed in the next week. They may not be employed in the next couple of weeks. And so, from an investor standpoint, from a mortgage-backed security standpoint, it's been quite the ride. Rates are absolutely historically low. By the same token, there's also been a constriction in terms of loan programs that are out there that are available. Guidelines have tightened up in terms of credit scores, down payment, and everything is dictated on the type of financing that you qualify for and the type of loan that you're going to qualify for. So it varies. There is no cookie cutter answer.
Yeah, it's not one size fits all.
No, not at all. Not at all. So depending on price point and down payment, your credit score, your income, all of those things play in. Not everybody's going to qualify for a 3% interest rate.
Right.
So there's
That's
quite
like,
a range.
for me, kind of dispelling that myth because people read in the New York Times, rates are cut, they're 0%.
Mhm.
And people are like, I want a 0% loan. And it's like, oh, actually, that's not for you. I'm sorry. It's disappointing for all of us.
Yeah. Well, if only rates were at 0%,
Yeah.
that would be amazing. But the reality is that mortgage-backed securities and loans in general, whether you're talking about a car loan or you're talking about credit cards or you're talking about a mortgage loan, nobody wants to loan money for free. There's got to be something to be earned on the back end. If I'm going to loan somebody $1 million, I'm not going to loan it for free. And so, yes, there's a big misconception. And again, it depends. Property type plays into it as well. There are still a ton of loan programs out there for people that are putting little to no money down. There aren't any no down payment options, but we're still doing conventional loans. You can do them with 5% down. But again, rate is going to play into it. If you're going to do a 5% down versus a 20% down payment, that's going to play into your rate as well as your credit score.
Yeah, but that's great to know because I think people do generally think, and I fall into this myself sometimes too, that you have to be looking at a 20% down payment, which homes in Los Angeles, we're not dealing with many homes under $1 million. So a lot of people whom may have good income, may have steady income for many years, I think get caught up in that. But I don't have $250,000 to necessarily put down. So it's nice to hear there are programs for people that might not fall into that category.
Yeah, there are a lot of options out there, and there's a lot of ways of structuring situations and people's scenarios. Not everybody is cookie cutter. And like you're saying, not everybody has 20% down.
Yeah.
We're still doing FHA loans. You can still do 3.5% down on an FHA loan. You can do, like I said, on conforming loans, you can do 5, 10, 15% down as well. And then, once you're in the higher price point, there are ways of structuring it so that, if somebody doesn't necessarily have the 20% down and they're at the $1 million mark, but maybe they've got 10% down, there's ways of structuring that. It just depends. It's a whole big picture. When we're talking loans in general and rates, we're looking at overall risk, down payment, credit score, property type, income, all of those things. So it's a total picture.
Yeah. And so those things are true always, even pre-COVID, and they will be post-COVID. What have you seen that has been challenging dealing with this crisis, just with regard to people qualifying or just getting a loan done now?
I haven't had any issues in terms of getting loans done. We're still getting them done. I have several people in escrow. We're doing 21-day escrow periods, no problem. I would say the big challenge has been just the fluidity of the situation. Guidelines for particular loans have changed almost on a daily basis, and it depends on the particular loan. Jumbo loans in particular have undergone a transformation, and those have gotten tighter. So they're requiring additional reserves, and you're required to have 20% down and things like that. So I would say that's the biggest challenge, is just the fluidity of guideline changes.
Sure.
In terms of process and stuff, we're still moving and shaking. And in terms of people qualifying, it's all about job stability, really. And if I'm finding that people that were interested in purchasing beforehand, that were maybe holding off because they didn't think they could get into the market because of the competition. People are now all of a sudden going, oh, maybe this is my opportunity.
Yeah.
So in terms of qualifying and turn times, it's all business as usual on my end. And I've done more pre-approvals for people in the last 2 months than I did before this. So it's good.
Yeah.
It's really good.
That's amazing. Yeah. I mean, and we were discussing before, I feel that way. The health of the market right now feels extremely strong. And definitely the last couple of weeks, there's been a surge of activity. And I think these buyers whom have lost out on multiple offer situations, when things have been so flooded with low supply and high demand, and people keep losing out. And so I think a lot of people are recognizing right now as a potentially good time to get in, for sure.
Yeah, absolutely.
With that said, I was in a 6 offer multiple this week, which I happily won. I'm very excited. But we are still seeing multiple offers, but it really does seem like a really fantastic time, especially for those buyers, which I'm sure you're working with as well, that have lost out on a handful of properties over and over because they're not all cash and getting a loan and just a lot of competition.
Yeah, and I would say the biggest piece right now for anybody is the financing piece. You want to make sure that your loan is absolutely airtight. Yes. Because again, depending on where you're going for it, the banks are all different. Mortgage brokers are different. Every lender is a little bit different. And so absolutely having your financing airtight it can work in your favor. I have several people in escrow now that were also in multiple offer situations, and it came down to the financing. Yeah. They weren't necessarily the highest offer, but they knew that their financing was absolutely concrete and we weren't going to fall out because of it. Right.
Well, and that's the other interesting piece right now that I'm transitioning into loving. But even before showing a property now, when I'm representing buyers and I have a listing coming out next week, a pre-approval letter has to be attached, and our COVID disclosure, of course, just to get into the property, and then also proof of funds, which those components normally we're not submitting until we're submitting an offer, and now they need to be reviewed ahead of time. which I think is
Yeah.
forcing us to be super organized and people to not be as maybe loosey-goosey as they might have wanted to been before about solidifying these loan components that you're talking about.
Yeah.
So I
I would
think
say there's a lot less room for error,
exactly.
which is good. It's a good thing as far as I'm concerned.
And so can you just give us a general idea? Again, like we said before, it's not one size fits all, but what are you seeing for rates just this week? We know that they're going up a little, they're going down a little, all of that, but just kind of to get us current.
So for purchase scenario, if you're talking 20% down and you've got, call it a 740 credit score,
Yep.
you'd probably be in the mid threes, 3.375 maybe. If you're talking refinance, depending on what your equity position is,
Mhm.
could be 3%, 3.125. Just depends on equity position,
Yeah.
and loan type.
Yeah.
I would say low to mid threes. Again, if you're looking at somebody with maybe a lower credit score and they're purchasing a condo, with 5 or 10% down, you might get into the higher three category,
Mhm.
3.625
Right.
maybe. But
Amazing
rates
though.
are going to continue to
I
stay
mean,
low.
yeah, it's really incredible.
Yeah.
Well, this has been so super helpful for hopefully myself for sure. I hope that everyone watching, and I really appreciate you taking the time. And I'm going to include all of Andy's information below the video if you want to get in touch with her or just have a preliminary conversation or have any further questions just about the specifics of where you're at with your lending needs. And yeah, stay safe out there, everybody. Thanks so much, Andy. I really appreciate it.
Oh my gosh, my pleasure. I'm always happy to be a resource. So just holler.
Yeah. All right. Thanks so much, guys. Have a great weekend. Bye.
Thanks, Nicole. Bye.